Welcome to the deep dive. Today we're diving into some research on staying afloat financially. With everything going on in the world right now, and maybe even thriving. Who knows?
It's a real concern, right? I mean, we're seeing global conflict and that instability. It trickles down, impacts your wallet in ways you wouldn't expect. But good news is there are absolutely ways to survive, thrive even with all the uncertainty.
Okay, see, that's reassuring to hear, especially with how the news is these days. And what I found so interesting about this research, this independent research you sent over, is it doesn't shy away from that. It really digs into how stuff like the war in Ukraine, the Middle East, all of it, it's impacting our finances.
Exactly, yeah.
Yeah.
It takes those global events and connects them to your personal finances.
Yeah.
It's not just theoretical. It gets into the details of how, say, inflation because of these conflicts hits your grocery bill, your savings.
Okay, so let's break down that whole inflation domino effect because it
Yeah.
feels like something we hear about constantly. But honestly, I don't know if I totally get how it goes from war thousands of miles away to my wallet.
It all comes down to how interconnected the global economy is. So, say a conflict disrupts energy, right? Oil prices go up. That impacts everything. Transportation, manufacturing. Suddenly, your dollar doesn't go as far. It's this chain reaction, and it can really eat away at your purchasing power if you're not ready for it.
It's like this hidden tax almost. And it makes the researchers focus on diversification even more important. But gotta admit, I hear that word diversification all the time, and sometimes it feels like I'm just supposed to know what it means, like magic or something.
It's definitely a word that gets thrown around a lot in finance. Think of it this way. Instead of putting all your eggs in one basket, like relying only on your savings account, you spread your investments around. Stocks, bonds, maybe real estate, commodities. It all depends on what you're comfortable with, your goals. That way, if one area takes a hit, stock market goes down because of global uncertainty, the rest of your portfolio, it's like a cushion.
So in the context of what we're talking about, if someone's worried about the war in Ukraine impacting energy prices long term, diversification could mean looking into, I don't know, renewable energy investments.
Right.
Or even commodities like precious metals as a hedge against inflation.
Exactly. Strategically positioning yourself to weather those economic storms, whatever they may be.
And the research doesn't stop at stocks and bonds. It talks about TPS and commodities too. I'll be honest, those always felt a little advanced for me, investment-wise.
Yeah.
Could you break those down, maybe explain it like I'm 15?
Yeah.
Laughs. 15. Bit more sophisticated than 5. I can work with that.
Yeah.
All right, so TPS. That stands for Treasury Inflation Protected Securities. Basically, bonds from the U.S. government that are meant to, well, help you keep up with inflation. The value of the bond adjusts with inflation. So inflation goes up, your principal goes up, and then when you cash out later, you get that adjusted principal back. Helps protect your investment from those rising prices.
Okay, that makes sense. And commodities, where do those fit in?
Commodities are raw materials: oil, gold, agriculture. Think corn, wheat, that kind of thing. Investing in commodities is a way to diversify beyond the usual stocks and bonds. And they can be a good hedge against inflation. Because when the cost of goods rises, so does the price of the raw materials used to make those goods.
So if you're worried about your dollar not going as far, having some commodities can maybe offset some of those losses.
Right.
Prices up, commodity value up.
You got it. It's all about managing that risk, being strategic with how you position yourself.
And speaking of risk management, the next big thing in this research is insurance.
Not just life insurance either, though that's still important, don't get me wrong. This research really reframes insurance, makes it more proactive for your overall financial strategy.
I loved that about it, by the way. It felt very, very relevant to, how the world is right now. Everything feels a little unpredictable.
It's about having that safety net for sure, but it's also about using insurance to actually build cash value, protect yourself from rising healthcare costs. I mean, let's be real, those are scary. And you can even protect your income if you're unable to work.
Like that saying, hope for the best, but prepare for the worst. Except here, we're not just hoping, we're actively building those safeguards.
Exactly. That's what being financially resilient is all about. You're not just riding the wave, you're learning to surf.
It's like insurance becomes this active part of your financial plan, not just something you file away and forget about.
Exactly. And one thing the research really highlighted was long-term care insurance. Especially now, globally connected world, healthcare costs are nuts. Supply chain problems, geopolitics, you name it.
Yeah, it's something I think a lot of people put off thinking about. But personally, my family's been hit by those rising costs, so it really resonated with me.
It's essential, especially as people live longer, And don't even get me started on disability insurance. So overlooked. Imagine you can't work, illness, or injury during economic uncertainty. That's rough, even with the best financial plan in the world.
It's about protecting your ability to earn. That's the foundation of it all, really. Now, this research, it wasn't all doom and gloom, right? It talked about building wealth, making money, even in these times. That's where annuities come in. And I got to admit, before reading this, I always thought annuities were like, I don't know, a lottery win or something.
Happens all the time. People think it's only for the super rich or retirees. But this research, it did a really good job explaining the different types of annuities, how they can actually work for different people, different comfort levels with risk.
Which, honestly, I appreciated. The whole annuity thing has always seemed a bit confusing.
I get it. There are a bunch of types. Each one's got its own quirks. Let's start with fixed annuities. Like the name says, fixed return. Good for folks who want stability, that guaranteed income. If you're the type to stress over the stock market, a fixed annuity. Peace of mind. You know exactly what you're getting. No market ups and downs to worry about.
So like a financial safe haven, when everything else feels chaotic.
Exactly. The set it and forget it part of your portfolio. Now, if you're okay with a bit more risk but still want some guarantees, there are variable annuities with guaranteed income riders.
Okay, before we get into that, can we define guaranteed income rider? I feel like that's another one that might make people's eyes glaze over.
For sure. It's one of those financial terms, needs some explaining. It's basically an add-on to the variable annuity. Guarantees a certain minimum income payment no matter what the market does. So you get potential for growth, the variable part, but also that safety net of income.
Like having your cake and eating it too, but with financial planning, not cake.
Laughs. Exactly. And the research made a good point. In uncertain times, globally speaking, that guaranteed income stream, really valuable.
It's like that buffer against the unexpected, which, as we said, seems to be pretty common these days. Okay, what about indexed annuities? I hear about those a lot now, but honestly, not sure how they work.
Index annuities are interesting. They're kind of like the middle ground between fixed and variable. They're linked to a market index, the S&P 500, for example.
So S&P goes up, indexed annuity goes up too.
Yep. But there's usually a limit on how much it can go up each year, so you benefit when the market's good, but only to a point.
And what about if the market tanks?
That's the thing with index annuities, you're usually protected from losses. Your principal is safe, even if the market goes down.
So it's a trade-off. You might not make as much if the market booms, but you're also not as exposed if things go bad. All about finding the balance.
Exactly. That's why it's so important to talk to an advisor. Someone who gets your risk tolerance can help you see if an indexed annuity fits your goals.
It's about making these decisions, from a place of knowledge, not just guessing. Okay, last type of annuity the research mentioned was the immediate annuity. Where does that one fit in?
Immediate annuities are for people who are retired or close to it, want to turn their savings into income right now, guaranteed. It's like creating your own pension. You give a lump sum to the insurance company, and they pay you a set amount every month for life.
That sounds pretty appealing, to be honest, especially now when pensions are, I don't know, kind of a dying breed. So we've covered a ton. Diversification, insurance, all these annuities, all this. With the world as crazy as it is, what's the one big thing you want our listener to walk away with for navigating their finances in this, shall we say, interesting time?
You said it. Interesting is one word for it. The key is we can't control everything out there. Conflicts, the economy going up and down. But we can control how we react to it. Knowledge is power. Get informed, talk to the experts. That's how you weather the storm and come out stronger.
It's about being proactive. Yeah, not just reacting to whatever gets thrown at you. Making decisions because they're right for you, not because everyone else is doing it.
You got it. And that's where, an experienced financial advisor can be so helpful. They cut through the noise, figure out your risk tolerance, all that. Build a plan that actually makes sense for you.
And speaking of which, this research actually mentions someone specific, Helen Hou. It's not often you see independent research recommending, like, a specific advisor.
Right.
That says something.
Right. Definitely stood out to me, too. Sounds like she's really good at, guiding people through tough times financially.
Right.
Making those plans that can handle, well, pretty much anything the world throws at them.
So for our listeners who are, ready to take that step, have that conversation about a long-term financial strategy, all that, what's the best way to reach Helen?
The research actually had her contact info. Again, super practical. You can reach her at 408-909-5865.
Perfect. We'll make sure to include that in the show notes too, because, knowledge is great, but you got to do something with it, right?
Absolutely. Take what you learn, turn it into action. That's how you build a secure future.
Couldn't agree more. And on that note, I think we're going to wrap things up for today. We covered a lot. Global conflicts, how they affect our money, diversification, insurance as a proactive tool,
Thanks.
and demystified those annuities a bit.
It's been great diving into all this with you. Hopefully our listeners are feeling a bit more, I don't know, empowered, ready to handle whatever comes next in the financial world.
And remember, even though the world can feel kind of overwhelming right now, your finances don't have to be.
Well said.
This has been The Deep Dive, and as always, thanks for taking the plunge with us.